Thank you. Now you already know I dig up data on panels, and I find interesting snippets that are sometimes very, very difficult to believe also. So about the AIFs, when I was researching, I saw a SEBI statistic, which was published last year, which said that in India, the AUM, assets under management of AIFs, is about 6.9 trillion in 2022. I'm on trillion numbers today. I think that's the jam. I know all of this is not real estate, but we are not a small part of it either, right? And the way the real estate is growing right now, and especially given near funding winter on account of the banks and NBFCs, I think it's very, very important right now that as real estate participants, as real estate developers, we look at AIFs and really understand what makes you tick. So I think that would be the flavor, Anuranjan, Nihar, of this. But let's sort of start with keeping this panel really Pune focused. I would want to know from both of you and you, Smita, as a developer, what is your sense on what the market is looking like right now, especially in the context of the city? How do we stack up as the city compared to the rest of the 6-7 larger markets in India? Where do you see us in terms of attractiveness index for an investment?
So if you look at the last, since you spoke about data, if you look at the last few years' data, Pune actually has been, except for maybe the last year, even ahead of NCR in terms of sales. And even before, I think as a market, it's always been fairly stable. I think for two reasons. One is because even the southern markets have been stable, but they are primarily driven by IT and technology-enabled sectors. Pune has a blend. It has that technology part of things, plus it has manufacturing, auto, various things. Plus, there is a lot of demand which comes from Maharashtra point of view. So Pune has been very stable. Pricing has been gradually on the rise, but nothing out of the ordinary, which is a good thing. End user demand has largely driven the sales. Like even Gurgaon, for example, has shot through the roof, but it's not that much of end user demand. We always know the cycles are far sharper. So I think Pune is a very stable market, but at the same time a very tough market to do business in. I can tell you that also. Partly because sales are good, and partly because historically Pune has been a market where people have worked together, developers. You don't find many other markets where developers work together as much as they do in Pune. In Bombay, it's almost... In Bombay, for example, if you're looking at a slum project or one of those where you have special expertise, it's different. But in general, two developers partnering together because they can both bring in capital, and share the pie between each other is a very common thing in Pune, and maybe the only other market is Navi Mumbai.
Very interesting insight, Nihar. When we are all sitting inside the city and looking at ourselves, we don't see this. It's a very, very outside and kind of a thought. Brilliant insight, Anand.
So it might be offensive to Punekar, but what I see Pune as an extended suburb of Mumbai now, and probably in next few years, because of the infrastructure, what is happening in this particular belt from Mumbai-Pune Expressway being widening up, then airport, then Atal Setu, the three things. Plus, the craze of people having a second home in Lonavala, Khandala, it's becoming a more of, and we see that this expressway, so-called expressway, is far worse than Mumbai normal roads. So, going forward, probably these twin cities, like what we see, Mumbai, Delhi, Gurgaon, Delhi, Noida, Greater Noida, it will be like Mumbai and Pune. And that will drive a big growth for Pune because Pune will be considered as a relatively a closer city to Bombay. And that psychological advantage, what it will give to people, it will drive real estate growth. And probably what I see is that we did one project closer to Somatne long back. At that time, it was looking like a very, very far location, but now it's
a part of the city.
It's part of the city.
It's part of the city.
Panvel, it was looking like a far, far location. Now Panvel is equivalent to any other suburbs of Mumbai. So Pune will get, and if it's due in big time, the other cities are becoming really, really very expensive. So Bombay, Pune, having land on this belt will have a very interesting
Benefit.
time. Yeah, benefit.
Smita, thoughts?
So, thank you, first of all, Aditi. And what I feel about Pune's real estate market is you have a lot of potential here. So, if we compare the statistics in Jan 2022, we have 17,700 registered properties, and as compared to the last year, it was 12,000 around, so something 46% hike. So number says a lot. So I feel there is a lot of potential, the kind of land available here, the kind of ring roads, metros are getting developed, and the IT is globally, the companies are looking this as a very good opportunity to settle down, and even the opportunity for the education. So the people are getting each and everything what they want here to live with. So they are getting the opportunity for the kids as a education, they are getting opportunity of jobs, and they are getting a very good weather. So that's the most important thing.
That's a big one.
Yeah, so all these things are attracting people to come to Pune, and that is how we are looking at it. It is very fast actually, the development is very fast, and we still have the empty land to where we can look at it and we can develop it. Unlike other cities like Delhi, Mumbai, there are no scope of development like such. The kind of roads are getting developed here, and plus the connectivity to the Mumbai. So that
Like
is one more the positive thing we can look at it, and affordable things as compared to NCR, MMR. So if you compare like that, and so all the positive things are there. So that is how we are growing.
So all stars, Smita, are aligned, but
Yeah.
but still, in order to make Wang, we need funds.
Yeah,
Right?
that's true. That's true. That's what the AIF is playing a major role in this.
So, sorry to interject, but if I was to ask you as a developer, there are three primary areas where I thought the funding is required, right?
Yeah.
Either when you're acquiring new projects, and by that I don't necessarily mean land, it could be other ways of acquisition,
Yeah.
JV, part JV, buying out of distressed, whatever the story may be. Or when you're getting approvals because they are getting mighty expensive by the day.
Yeah.
Or when you are executing, right? Obviously, sales and marketing does help.
Yeah.
Like he said, that it's a difficult market because sales are good, right? But it's a great market to be in because sales are good as well. So in these three sort of life stages of a project, if I ask you, where is it that the developers really require funds, in your opinion?
See, it depends on the developer's strategy where they look at it. So if suppose if someone gives me the option in all these stages, I will go for the acquisition, because from the entire life cycle of the project, from the day one I am there. So from the day one I can actually analyze the design of the product and the sale of the product, each and everything. I mean, in the entire life cycle, I can experience that. So as a investor, if I go to any other project, then I would definitely go for the acquisition level. And of course, there are different execution, and that is the most important thing I feel. So many small scale developers are looking at the big entrepreneurs to come into that because they have a good experience on the small scale. But taking that jump, higher jump to the big level, so that is difficult for them. And with the AIF, which we are actually, it's a collaboration between the developers as well. They are getting a good knowledge sharing on the table. So this is the most positive thing I feel. So between the developers, they are getting collaborated, and they are getting what the exact requirement is there. And for any business, I feel the 3 T's are important: the trust, transparency, and the time.
Very well said. Very well
So that all the 3 T's are getting through the AIF. So both the developers are getting timely things. They are transparent enough to understand each and everyone. And so these are the things which is actually coming on the table with the AIF. So that is how it is going to the 6.9 trillion.
said. Anuranjan, she is backward integrating.
So what
How will you get in? Now, developers are saying, listen, we are happy to backward integrate. We are happy to create our own AIFs.
Yeah.
And we think acquisition is where the real value game is.
Yeah.
Where do the traditional, if I may call you that, I know you're far from it, but where do the traditional AIFs really come into this
So
picture?
C mentioned about 3 T's. I am adding one more. One is the type of money. Okay. What type of money you get from AIF? Is it debt or is it equity? Now, if it is debt, it is actually, we have seen the debt cycle for last 10 years. We have seen the consequences of debt cycle. These are the really, really good times. That is looking very cheap right now, very attractive, but after 2 years, the same thing happened in 2013, 14, when markets were good, and we were always thinking that, it's a cheap debt. So why we need to dilute equity? And we have seen the consequences. See, unless the project is completed and the money is paid back, the liability of debt remains in
Very
system.
true.
And that 20% IRR, it has spoiled and killed many businesses in the country. And in Pune, everyone knows how many developers who were in business for 30 years, 40 years, they are out of business now. And good one. People who have done 50, 60, 70 buildings in past 30, 40 years, they are out of business now, just because the debt. Thing is that the type of money is very important. And AIF, unfortunately, for some time they were running NBFCs. It was not a AIF. AIF essentially was for equity or equity-related instrument, but the problem is that we started, bypassing, structuring the equity. It was actually, just to give a good name, we said is structured equity, but it was a debt. Okay.
Of course it was, but I thought you guys said structured equity.
No, I never. I really don't.
No,
of course, we did.
You're right.
We did some debt transaction, but essentially, we were not happy about these debt transactions, because in debt, when we have seen that the guy is defaulting, is not able to pay, and if we force him to pay, it's a spoiled relationship. It's better to take equity exposure. It's better to go with the flow of market rather than forcing somebody to pay and pay a high interest. So essentially, if somebody has to pay high interest rate, you should have gone to bank and done a relatively cheap deal. The financial closure is not that we provide 100% debt at the acquisition of land, and then we top up money and say that service interest from the top up money. This is all, we have seen all this in past, and it has spoiled market big time. People, including some NBFCs, they are out of business now. Including some AIFs are out of business now. The type of money is very critical, and AIF is actually a big responsibility. We deal with multiple investors, and these investors who invest with us 1 crore, 2 crore, 5 crore rupee, they have given a huge responsibility to pay back. What I've seen is that, there is whole focus of investing rather than realizing that money. So investing is just a part of business. Exiting is a major part of business. And, fortunately in our previous funds, we were able to exit I'll say 95% of our portfolio, but that 5% is still hurting us and is still hurting our investors. So, if I'm staying in this hotel and if I pay 5,000, 7,000 rupees rent, and if the service standards are low, I complain a lot and I can escalate to general manager level. But if somebody has invested 1 crore rupee with us, and if they are not able to appropriate that money in a proper way, you understand what kind of problems we are creating in system. So AIF actually is a big responsibility. And I've seen that, many new AIFs are coming up. And particularly if you are saying that the developers are raising AIF, it's a huge conflict of interest. A developer raising money for his own business, the problem is that suppose if things goes wrong, we don't know what will happen in next 1 or 2 years. The consequences are really, really, really bad. So, of course, the
responsibility multiplies, I think, when
multiplies big time, and it's we feel that it's a very easy business. We have seen Unitech, and we have seen many other real estate developers who were around 1 lakh crore rupee kind of market cap. So it's not that easy.
It isn't. Nihar, how about you? Which point in time and what type of money do you think you would like to bring into a market like this one?
So, see, the biggest problem with real estate AIFs is, unlike other sectors like private equity or VC, is that every investment has to perform. Because no matter what you do, whatever structure you enter into, there is a cap on the IRR you can make on a best case basis. Okay, I don't think you can go beyond 25%, with all the positive surprises. But if one investment goes wrong out of 10, and let's say your average target IRR was 20, you come down straight to 17 or 16 with just one investment. And I'm not saying capital loss, I'm saying not performing. So maybe 5%, 10%. What happens in other sectors is that you can have a multi-bagger which is 20 times, which can easily compensate even a business shutting down, right? And you can still make a lot of money for your investors.
Ability of averaging is better.
Correct. So I think if you ask me at a fund level, I would always look at a mix. Eventually what structure you do is a function of the market. Right now, I think we can all take some courage and say that let's look at structures which are debt plus, right? Which is not just pure debt. But 5 years back, for example, that was out of the question, right? So I think right now, if you ask me, Pune has been a stable market. What we try and do is, in projects that we are getting in at very, very early stages, we have a more of a debt-oriented structure. But where we are getting in at a slightly more advanced stage, and I'm not saying advanced means advanced maybe from an approval standpoint, where the project can hit the ground running, right? Approvals are, maybe EC is already in place, application for CC has been made, and or basic CC is in place, so on and so forth. There we look at debt plus structures, depending on the counterparty, of course, and the size of project. So I think it's always a blended approach and a combination. Because beyond a point, otherwise you'll not be able to play the cycle out in the right way. And
you can make your math work otherwise. I think I think your responsibility to your investors is to make sure that the math works, as Anuranjan rightly said. Sorry, go ahead.
हर मर्ज की अलग दवा है.
Very well said. लेकिन सर हर मर्ज की अलग दवा है तो every developer is also doing their business differently in real estate, right? A lot of them are still working through corporate structures that are not very suitable, if I will, to even bring in domestic venture capital through AIFs, let alone a foreign venture capital. So a lot of us still work through LLP-like structures. A lot of us are happy to do it because it's more tax efficient. How do you look at it? Is there a way to sort of participate in LLP-like structures for you all now?
Yeah, we are doing from 2013. So all our investments were in LLP. So LLP, we are not shying away.
You're not shying away. Partnership firm is obviously, I think, a history now. But
a partnership firm, SEBI regulation doesn't allow. But LLP are doing, and we are doing it very easily and very efficiently. There's no problem.
There's no problem. How about you, Nihar?
So we haven't been doing much of LLP, but I think there are few cities, like Pune is one city where LLP culture is very prevalent. So we find other structures to do it through private limited companies, to issue debentures. So I think that's the route we follow.
Correct.
But lately, what I have also observed is, looking at the market, a lot of people have realized that at some levels there are benefits of being in a private limited company structure, and they're doing that also because you can build a balance sheet over a period of time, which helps even on your borrowing costs over a period of time, as your net worth grows and so on and so forth, which is very difficult in an LLP. So for various reasons, people are, they may have gotten there because of, let's say, somebody insists that, I'll only do funding because of this, but now people are getting the benefits.
Legacy they have got there.
So yeah, so now I think there's definite shift. So we find some solutions.
You end up finding solutions. No, I think it's important that the developers know that there is a solution that can be sort of figured out, and that solution is not necessarily to pay extra in terms or having leakage in terms of tax or duties. I think that is important. My question is to all three of you now, and we'll start with you. And if you can sort of, if it is a matter of in public domain, what kind of investments, partnerships do you guys currently have when it comes to the city? And then we'll get into what are your sweet spots. What do you like to invest in the city? Right. Can we start with you, because yours is least known probably.
So right now we are into the residential and commercial. So a million square feet of commercial is going on, and we look at it as actually a very good option. So right now there is a huge demand. So if you consider the macro market of Pune, so if you consider the Kharadi in the east and for the Baner, Balewadi in the west, and even the south, Hinjawadi and all, if you compare all those macro markets, there is a huge demand of this, and plus the premium and the luxury homes. Post-COVID, the people have analyzed that they actually need a space, the bigger space. So now the 1 BHK, 2 BHK trend is not there. So 3 BHK, 4 BHK, duplex are people looking at. So definitely the premium and luxury housing is the trending one, and people are moving towards it. So as a SSPL group, like we are bullish about both the things, for the commercial and the premium and luxury residences.
So you're really putting your dollars into upcoming mid-suburbs, if I may call it secondary suburbs or mid-suburbs, I think. How about you, Nihar?
So historically, we've done work across the city, but right now I think we're seeing a lot of interest coming from the western part of the city, because I think that seems like a lot of development is happening there, and there's also what appears to be a fairly high demand-supply gap, because whatever comes to the market seems to be going off the shelves. So coincidentally, we're getting a lot of deal inflow from that front. From the beginning, so our approach has always been in each city, to focus and find a very few number of partners with whom we can do repeated work. So Pune, one of those partners historically has been Patil. So we've done work with them in the past. We continue to work with them, and we've also done some repeat transactions with Sky. So I think these are two names where, of course, we're always looking for more. We're right now raising our 6th fund. We just announced our first close some time back. So we will be now looking at more investments here also. So we will find new partners, but these are partners where we've done repeat investments in the past.
I agree with you on the western part of Pune. If you look at the data for the last financial year, I think highest number of units sold and launched both.
That's true. That's
really
true.
Came in from western Pune. So yes, everything that gets launched, right price, right size, gets subscribed to.
That's also not a great thing, because everybody thinks that they are, outstanding, and which is the first bad sign. But the good part is, I think people don't get ahead of themselves, at least in Pune, I think, as much.
It's very unlikely that you will land up with lemons in that market. Let's just sort of say that. Anuranjan.
We did 3 transactions. One was at Karadi. It was a last mile transaction where we helped developer to complete the project. Project name is Liviano. And fortunately, after we put money, the project got complete. People are living there now, more than 230 odd. Of course, it went through its own multiple issues after our investment, but finally, it's all done, delivered. We also invested in Kothurud. The project is now being developed by Arvind Limited, and we did one transaction in Wakad. That was an inventory purchase. Again, we purchased share of landowner, and the transaction was with Pride Purple Group. Project is complete. So whatever we did here, 3 projects all done. We are looking for more land parcels.
What parts of town do you like, Anuranjan?
So I'm more keen towards Hinjwadi, Wakad side. I'll say that particular area is relatively, the entry point is appealing. You feel that you are at a safe zone. So this is something. But at the same time, if the land is, again, हर मच किया
like the way.
So अगर land historical है, you don't mind going into that, and structure in such a way that you get equity upside as well as a base IRR. So AIF beauty is this, that you can structure your transaction to create a win-win situation.
Very true. I mean, we seem to be talking about largely residential when it came to both of you. You obviously mentioned commercial. Any thoughts on non-residential, especially office in Pune that you have? Are there any plans for exposures? Does probably your new fund allow you to partake that?
So focus is residential, but we can always look at some commercial investments. I think it's purely, so we don't do any commercial which is lease and hold. So it's a strata sale. So we're always open to looking at that also. And I think even right now, if you see commercial projects, if they come in the right location, they're doing very well. They're selling well, and development is relatively easier. It's quicker. So we have evaluated in the past, in the last 2 to 3 years, and we'll continue to evaluate. But focus will still remain residential.
Still be residential. How about you?
So we are planning to do a micro REIT as and when this is coming. Probably in next 2-3 months, the guideline should be there from SEBI. Then yes, a project which is 80%, 90% complete,
leased,
we could be...
80%, 90% complete in terms of completion.
Yeah,
leasing can be
leasing can be, and of course, a project which is already leased, independent building, etc., we will be looking at that.
I think,
but we are eagerly waiting for regulations now.
Why don't you finish?
I think if you compare with anyone is dealing for residential or commercial, they're looking at the numbers, how they multiply. So if you compare that, the commercial is all time giving a very good returns. So I feel the commercial one is the best choice.
No, but what I'm liking on the panel right now is Nihar is really saying, listen, I like strata. So long as you're creating internal accruals, I'm loving this. Whereas what Anuranjan is saying that, no, wait a second, I'm playing a long game. Very happy to buy an asset which is almost ready, take it off your hands, and then let the lease rentals really ensure returns for my... So I'm just liking the fact that for a city like ours, there are both these models which are available, and both types of capital, while we were talking about types, both types of capital which is available for subscription. I think that is really, really interesting. Any no-nos? So for example, we keep hearing about luxury being too luxurious, or, the value of unit prices going too high. Any red flags that you see at the moment in the city? Anything that you are not likely to touch with a barge pole? I'm happy for all 3 of you to take it.
I have never looked at low-cost housing projects. I will never do.
Can we define low-cost housing? Because that definition
for a city like Pune, probably anything sub 4,000 rupees a square feet will not touch.
You'll not. Because you don't see the margins. Very difficult to turn it around. Understood.
I think this I agree with. The second is, I think wherever we find that the land title is very complex, those are problems that I don't think anybody can resolve, and we don't want to take a chance at all. And more importantly, there are other opportunities available. So, beyond a point, we've realized that after all the diligences you do, eventually it's still about taking a leap of faith, and that courage sometimes is just missing. So I think that's something we'd want to probably stay away from.
Complexity in land title.
Yeah.
Everything else is fine for you. Understood.
I strongly agree with both of you for the affordable and the small housing and plus the litigation. So wherever there is a litigation in the land, so big no. Because recently I have received one proposal of a land where it was acquired lately, and actually after the new rule that daughters has the rights in the father's property, so that daughter is non-traceable, and so that is how I denied the property to invest in, because no litigations.
But with developers, we would like to, we'll be happy to work on the litigation fund. Okay. So
I'm beginning to like this. I think all of us should take an offline appointment of this gentleman right here. Explain this litigation fund. What is this new thought?
You create a fund where you get into properties which are litigated. You come at early stage, you get properties at 10%, 20%. You try to resolve it through your funding, and then you make.
And then you exit in some
I think to put your hands into the litigation when you should have the sustenance power a lot, because that may not solve the.
He's Mr. Moneybags. He's got the sustenance power.
Yeah.
That's.
So it takes care of your entire life cycle. When you say that you have a 10 years of horizon. You block the properties, you solve the litigation.
That's true. So for the long-term investment, what the kind of portfolio you can manage on, the short-term and long-term. So for the long-terms, you can go into the litigations then. But that too, like lottery, if lagi to, you will be a billionaire.
I think that's where you will make the non-real estate VC kind of returns, which are in multiples
that
and not restricted to the 25% IRR that Nihar was very rightly mentioning.
That can average the returns.
I think Realty Plus should take the credit for this new fund. Sapna, if you're listening to me, you should do this very much. What are your 2 or 3 guidelines that both of you want to give to developers when they're bringing in projects to you? What are the first sets of information? What are the first sets of sanity that they should do so that the conversation for fundraising is A, smooth, B, quick?
See, my advice to developer is that avoid that. It's a sweet poison. Okay, we have seen consequences. We have seen best of developers going out of business. Avoid that. Mix debt and equity ratio in such a way where you make adequate returns and with peaceful returns. So don't forget equity.
But if they have to make adequate returns, what kind of returns are you expecting, Anuranjan?
So our will be around 18-20, but it's possible. It's not
in an equity-like structure.
In an equity-like structure. Now, 18-20% with proper patient capital is a good return.
It's a great return.
We should never promise, as a fund managers also, very, very high returns to our investors. They get spoiled.
True. Nihar?
So, I think if you split all the developers, at least in my experience, I've realized there is a group of developers who are extremely aggressive. There are a group of developers who have become very conservative, and there are very few in between who are striking the right balance. My only point would be people on both extremes. Ambition is great, but I think where there's too much aggression, it leads to a poor capital stack, which sets you up for failure in a down cycle. And there is going to be a down cycle for sure. Right? It's a matter of time. That's it. And too much conservatism in a cycle like this is losing on a great opportunity. So, unfortunately, I think not more than 20% is striking the right balance. So I would only say that, look around you and try to converge towards that center So you can utilize your strengths well and use the opportunity, and at the same time don't overtrade just because the markets are great. I think that's one thing that I would want to probably say.
100%. Fully agree with you.
And do not overtrade. I think it's sort of all of us need to sort of highlight that and underline that. And I think what is really important, Nihar, as you said, is that there's no point in losing out opportunity in a market cycle like the one that we find ourselves in by just trying to be overly conservative, which is been the case after especially the last cycle and the pain that everyone's sort of gone through in the last cycle. Any parting words, Smita, before we sort of bring this to a closure?
So, I just want to say, like with the AIF, the developer's life is much easier, and the kind of returns real estate have given. So I feel the AIF should increase the percentage of investing into the real estate. And as a developer point of view, I would like to use AIF as a collaboration point for the developers so that the knowledge sharing will be done and we can actually grow together. And that is how.
Any additions that you guys want to make?
Yeah, I agree. We're fine.
Aptly said. Anuranjan? Do not take debt. I heard you. Anything else?
I think real estate and AIF actually, with AIF having a very, very limited time frame, and real estate is very uncertain kind of thing. So probably we need better regulations in a way where AIF can be strengthened for recovery and closure of matters associated with investing in India. This is actually, if we resolve this, then the flow of money to AIF can be humongous, because the problem-solving ability in India is very complicated. If we have a fight with developer, or if we are not able to recover money, and AIF having a very limited time span, we are gone. So this needs to be changed, and then the real risk capital can come in India, and big money can come. You said $1 trillion for prop tech. Before that, $1 trillion for prop tech, $1 trillion for AIF can easily come. Means, of course, I'm 15, 20 years later, but
Correct.
Thing is, it's possible, provided the structure is good.
I think that makes sense. I think that makes sense. If there is a problem, how do I get out of the problem? If there is a solution of that.
There has to be. Unfortunately in India today, the risk capital from outside India is not coming. Everybody is investing in income building asset. There is no money which is available for development. So development capital is not there. Development capital is coming only through domestic fund, which I will say is not that big enough to take care of the size of economy and size of real estate industry we have.
Very true. I think well said. The funding gap, I believe, is real, right? When it comes to development, I think funding gap is very real. And with the way the banks and NBFCs are tightening their methodology or way of working, I think AIF is the new big sort of solution that this sector is looking at. And Anuranjan, you rightly said that there are some structural matters that the regulator perhaps will have to pay attention to and solve. But what is even more important that I'm taking away today is that both parties need to understand each other's business models.
Certainly.
Right? So you have to understand where developer really is seeing the gap. And the developer needs to understand the massive responsibility that the investors have sort of put on your shoulders, not only to return their capital, to make a decent return for them. I think that's a good point to sort of end this panel on. Thank you so very much.
Thank you.
I'm going to look for...
All right, thank you so much. आप लोग को पता है आप लोग को क्या करना है, मुझे रिपीट नहीं करना. Thank you so much. Brilliant panel discussion indeed. We'll take 2 questions because I believe knowledge अगर बढ़ रहा है तो और ज़्यादा बढ़ाना चाहिए. Sir.
Hi sir, I just want to ask what about fraction investment in real estate? As in, how can we take it forward?
Sorry?
Fraction investment, which is nowadays.
Fractional ownership.
Fractional ownership.
See, people are doing fractional ownership. It's illegal in India. SEBI has come out with a consulting paper. Issue is that despite SEBI giving a clear guidelines, people have come out and they are selling properties. I don't know why SEBI and they are silent. These people actually should be behind bar. Trust me. It's a clear case of collective investment scheme. It's a CIS which SEBI in their consulting paper, they have mentioned it, that it's a CIS, you should not do, but people are doing it. 5 lakh rupees, 10 lakh rupees, then why you need a AIF if I can collect money from anybody and everybody,
Anuranjan, can I extend his question and ask you, why would anybody do it now with the MSME REIT or micro REIT? Why would anybody want to do it for commercial anymore?
So what happened is that a year back when SEBI came out with this consulting paper, everybody stopped it, saying that, SEBI is coming with MSME REIT and we will use that model. But now SEBI is taking its own time. People have lost patience and they've restarted the business. Very recently they did one transaction. One person did 400 crore rupee transaction. And I was surprised how you can do it when SEBI is saying that this is a CIS. But sab chal raha hai Hindustan mein.
I think what is happening is because it's not been implemented fully, but now people know that this is going to happen. So people are doubling down, and the minute that comes, they can flip it into a REIT. Now there is a legit reason to do business. Previously it was, not. So I think that's the mindset is what I feel at least.
I think I agree with you.
But kya hua hai, Nihar, ki, how I look a law. I look a law from today's point of view. Tomorrow it can change. Issue is that whether whatever I'm doing today is legitimate or not. Answer is no, it comes under CIS. If I have to migrate to a micro REIT, I need a sponsor who will be putting 15% of capital. Do I have that in the model which I am using now? But even if I use this now, it is still illegitimate. A partnership firm, LLP, cannot have 1,000 people as a partner and say that it's a private circulation of email and we collected money from private people. It's a SARA scheme. So, fractional, I'm very vocal about it. It's an illegal business, always avoidable. We evaluated multiple times. I met best of lawyers in country. I said, people have raised 10,000 crore rupee. Why I should not do it? Because I have I have investor base who can take this fractional very easily. But best of lawyers suggested was, don't do it. You will be behind bar.
Let's hope SEBI comes out with this regulation and really notifies it and at least allows those people who really want to do legitimate business to actually tap that untapped potential. I think we have another question there.
So more conventional alternative investment funds. Just want to ask you, we are looking at developing roughly around 2 million square feet, half or quarter commercial, 3/4 residential in the Hinjawadi area and stuff like that, because it's a very hot market, Now, what also understand, if we did various other projects, at what stage do you all enter? Do you all enter all the way from plot buying, or is it after the plot has been bought? At what stages do you all enter? To understand a bit, if we did various projects at the same time.
So we come right at the beginning, but if you're aggregating land, we don't participate in the aggregation process. Let's say that you're going through a certain process of, I'm going as early as the earliest point. So anything after that is fine with us, right? So the earliest stage is if you're aggregating land and you've done all the hard work and now the final amount needs to be paid, upon which the conveyance of the entire land will be done, in the favor of a particular entity in which we're investing. That's the stage that we come in. And anything after that is obviously fine.
Lovely. Yeah, so clean title, one plot, just go ahead, basically. And what are the type of rates of return that you'll look for? Debt, okay, how much would debt be and what would equity be, roughly?
So I think the maximum time that we spend in any deal is pricing it. So like he said some time back, it really depends, right? We look at it from a portfolio perspective, and the idea is to what is the right way to price it, keeping in mind the risk that we are taking on that investment. So I don't have a straight answer. Like I said, that's the maximum time that we take. So impossible to give you one answer for that question.
We'll speak offline.
There's no equity in real estate, resident.
Thank you so much, sir. Wonderful insights shared. And like he's mentioned right now, we are unfortunately short of time. So anybody else, any questions, you can kindly take it offline. But please give it up for all of them. Thank you so much.